Hello, everybody. This is Chuck Carnevale, co-founder of Fast Graphs, the fundamentals analyzer software tool, aka Mr. Valuation, bringing you another Lessons in Valuation 2-minute drill subscriber request series. A company I've been asked to look at, which I really wasn't very aware of, is a company called HIMS and Hers Health. HIMS is the symbol. It's a very interesting company. So let's go into Fast Graphs and take a look at it. And there's some really interesting lessons in valuation here because it shows how people can get hyped up about things and start losing track of the real reality of what value is. So here's the company. Now, the first thing I want you to notice, we're going back here to 2021. It hasn't been around very long, but after it came out in its IPO, you could have held it for several years here and actually lost most of your money, over half of your amount of money, because the company wasn't making any money. But then in fiscal year 2024, they had a really good year here. And let's go into the historical graph. And starting in 2024, they had this 582% growth rate. Okay, so all of a sudden, the stock that was losing money every year, all of a sudden earned 53 cents a share. But now if we shorten the time frame, we get this massive growth rate, but that's not a realistic number because you got 580% growth, and then you got 20, 30, and 50% growth following that. So again, one more year off, and now the company's growing at 34%. Interestingly, that's inconsistent with how the company's expected to grow going forward. But let's look at it from a realistic point of view. The earnings yield is less than 2%, 1.08% to be precise. Company does not pay a dividend. You can see the massive volatility that the stock has basically gone through. If we look at it from the beginning of December 2004, and then look at it by February, the stock had gone up this incredible 150% in a very short period of time. But then from there, we see it immediately drop like 60%, and you really gave back all the money you made, only to see it go crazy again and rise again. Okay, and that's obviously this kind of stock action gets people excited because we see these big numbers. But these numbers are false. They don't last very long, and they don't really exist. So when you're looking at this company from a practical point of view, even if I stay in the 3-year graph, all you're facing is a lot of volatility. You've got good growth potential. Company's expected to grow at 36% a year going forward, but that doesn't justify a 92 PE ratio. So this is the kind of thing, and how much of this volatility is the average investor going to be able to handle? Anyway, this is a very interesting company. It's headquartered in San Francisco. It's a telehealth platform that connects consumers with licensed healthcare professionals all the way across the U.S. and the United Kingdom. It's only founded since 2017, but it offers a range of prescription drugs for things like weight loss, hair care, sexual health, wellness, and so on, weight loss. And it's an interesting company, but this is a classic example of how emotions can drive market prices in the short run. And fundamentals, as good as they are, aren't good enough to justify the price or value that the stock is currently trading. Anyway, if you like the video, give me a like, ring the bell so you get notices of new videos like this. Look at joining our YouTube channel, and also take a look at subscribing to Fast Graphs. It can really keep you grounded when you're trying to make sound long-term investments. And by the way, Fast Graphs is built for the prudent long-term investor. It's not a day trading tool. I don't believe those tools are ever worth anything. Investing implies the long-term ownership of great businesses bought at sound valuations. Thanks for watching.